All right, so remember, when on the date of the foreign currency transaction, when we recognize that, we have to record in our functional currency. So let's have an example where let's do a cash transaction. Very simple. We are gonna buy euros and have those on deposit. We're gonna open up a foreign bank account. We're gonna have those euros on deposit in our foreign bank account. All right. So we know that it has to be, and we're going to say we're going to do this transaction as of January 1st. So let's take a look and let's start thinking about how we're going to do this. All right. So we're going to buy euros. On June 1, 2020. Okay, that's our transaction. Okay. So how many euros do we want to buy? Well, let's buy 100,000 euros. Right? There is a business reason, whatever that business reason is. We don't care, right? It may be that they want to put the money in the euro because they're planning on doing a transaction at some point in time. So we're going to buy, and that's not supposed to be a dollar sign, right? It's supposed to be the euro sign, right? So we want to make sure that we are using the right type of distinction, that we are buying 100,000 euros, right? So how much is 100,000 euros going to cost us in US dollars, right? That's the question. So we can go to our exchange rates and see, well, what was the exchange rate on June 1st to make sure that we are, because every transaction we record has to be in our functional currency, and we are talking about a US company, so therefore, given the designation of what is a functional currency, we've determined that the US dollar is a functional currency. All right, so let's go and take a look at some exchange rates. All right, let's go back to our little Quandl spreadsheet where we pull down all of these exchange rates. This is the euro US dollar exchange rate. These are the exchange rates from the Federal Reserve. Let's go to June 1st, and we see that the exchange rate on June 1st was 111.23. So in order to get 1 euro, I would have to spend 1.1123 US dollars. So I did it's a pretty simple math, right? So the exchange rate, let's move over here. The exchange rate is 1.1123 US dollars per euro. Okay? So I have to spend 1.1123 for a euro. All right? So this is dollars to euro. So we take our 100,000, I know this is elementary, 100,000 euros times my 1.1123 dollars to euro. Okay? And if we think about this, right, we think about just this, what we're getting rid of here. When I execute this transaction, the euro designation cancels out, and so it's going to be this times 100,000 is going to give me my US dollar equivalency, or 111,230. Now in dollars. So when I record this transaction, I'm going to show cash of, I'll do some increases and decreases, right? So I'm going to show that I've got, I basically just took 111,000, right? And this is what it's going to look like. Okay? And this is all cash. Okay? And it's just a transfer of cash from a US bank account to euro denominated cash, right? But it's recorded on our balance sheet as in the functional currency being US dollars. Okay? Now, what happens when I get to my balance sheet date of June 30? Right, because we're dealing with an interim date, so now we're here at our balance sheet date. Of June 30, 2020. I have on my account, right? I have in my cash account this designated euro of 111,230, right? Is that what it's worth today on June 30? This is what it was worth on June 1st, but what is it worth today? Well, let's take a look. What is the exchange rate? Let's go back to our exchange rates here. And let's see if we can identify what our exchange rates here. I'm going to zoom in here a little bit, get this a little bit bigger so we can see it better. So let's take a look. This is our June 1st exchange rate. Let's go up, broaden that out. Our June 30 exchange rate is now 112.37. So I know that in order for, let's just kind of keep that in mind, 112.37. I know that I have to revalue this 111,230. It's now has to be recorded in the functional currency as of this date. So the cash, right? The cash value of this now has to be euro 112,370, right? Cash increased, right? Because I had euro, and now that euro, it costs more US dollars to get that euro. So do I have a gain or a loss? It's a gain, because I had money there. It's now, if I sold these 100,000 euros, this is how much I would get. I would get more than what I had originally. I would get $112,000, 370. I paid 111,230 for it. So I have a transaction gain. So how do I record that? Well, there's going to be an increase. And again, I'm just using this just so that we know that this is denominated in euros. It's not just US dollars. I'm going to have an increase of, I'm doing the math here very quickly, of $1,140. Again, this is cash. Right? Cash increased by $1,140. And I'm also going to have a gain on FX, foreign exchange gain, of $1,140. And this is going right through the income statement.